The high-stakes trial of Terraform Labs co-founder Do Kwon is scheduled for January 26, 2026, in the U.S. District Court for the Southern District of New York. He'll spend the next year in federal jail after his lawyers consented to his detention. The trial, expected to last 4 to 8 weeks, will address criminal fraud charges tied to the catastrophic $40 billion collapse of the Terra UST stablecoin and its sister token Luna in 2022. This case is a culmination of international legal battles, financial ruin, and allegations of deceit that dismantled the promises that once captivated millions of crypto investors. Do Kwon, who pleaded not guilty to the charges last week, has been accused of multiple counts of fraud, including securities fraud, wire fraud, and conspiracy to commit money laundering. Prosecutors allege the Terra founder orchestrated schemes to manipulate markets, misrepresent the stability of Terraform's products, and launder proceeds through Swiss bank accounts and other blockchains. If convicted, the 33-year-old faces a maximum sentence of 130 years in prison. In addition to the criminal charges, Kwon faces multiple civil lawsuits. In April 2024, a New York jury found Kwon liable for fraud in a case brought by the SEC. Terraform Labs agreed to a $4.47 billion settlement with the SEC in June 2024. The Commodity Futures Trading Commission, CFTC, has also levied allegations against Kwon, compounding his legal challenges. Speaking to Decrypt, Sid Powell, CEO and co-founder of Maple Finance, called the Terra ecosystem collapse a wake-up call for DeFi, or decentralized finance, a catch-all term that describes the various protocols and platforms built around automated, crypto-driven finance products. When it comes to regulatory effects, lawmakers began cracking down on DeFi protocols more aggressively, said Powell. Developers responded by prioritizing resilience and risk management, incorporating over-collateralization models, and exploring hybrid mechanisms that combine algorithmic design with collateral. How $40 billion was lost in days. The collapse of Terraform Labs' ecosystem in May 2022 remains one of the most devastating events in crypto history. It wiped out $40 billion in market value almost overnight. Both UST and Luna were designed to work together in a system that promised stability and high returns, but flaws in its design led to a catastrophic failure. UST stability relied on an algorithmic system where its value was maintained through a burn and mint mechanism with Luna. When UST traded below $1, users could burn UST to mint Luna, reducing supply and restoring the peg. Conversely, when UST traded above $1, Luna could be burned to mint more UST. On May 6, 2022, a large UST sell-off on Curve Finance caused the stablecoin to lose its dollar peg. Panic set in, leading to mass redemptions. As UST's value fell, the burn and mint mechanism drastically inflated Luna's supply, diluting its value. Within days, UST plummeted to 13 cents, while Luna's price collapsed from $64 to fractions of a cent. The algorithmic system failed to stabilize UST, triggering a death spiral that obliterated the ecosystem's value and impacted more than 1 million estimated victims. The collapse also rippled through the crypto sector, pushing several interconnected projects into bankruptcy and contributing to the eventual downfall of the FTX exchange. There was also reinforced skepticism toward high-yield generating crypto projects since the crash, prompting a shift in focus toward more sustainable projects. Say Labs co-founder Jayendra Jayajog told Decrypt, trust in algorithmic stablecoins, seen as innovative but inherently risky, diminished, prompting investors to focus on fiat-backed stablecoins such as USDC and USDT. Extradition tug-of-war. Following the TerraUSD collapse, Kwon went on the run, evading international authorities. Kwon was arrested in Montenegro in March 2023 for attempting to travel with a forged passport. Both the US and South Korea sought his extradition. Montenegro's courts initially ruled in favor of South Korea, but US prosecutors ultimately secured his extradition in December 2024. Upon his arrival in the US, Kwon appeared in court and agreed to remain in custody without bail. The Terra crash exposed the vulnerabilities of algorithmic stablecoins and unregulated financial systems. Kwon now faces trial, which will serve as a litmus test for accountability in the largely unregulated crypto space. Terra is a cryptocurrency that automatically tracks the price of other assets or currencies. It is an open-source blockchain payment platform. Users may instantaneously spend, save, trade, or exchange Terra stablecoins thanks to the Terra blockchain. Stablecoins, or digital currencies backed by governments like the US dollar or the euro, are produced via the Terra protocol and are intended to continuously track the value of a fiat currency. It is made up of the cryptocurrency coins Terra and Luna. Terra stablecoins are named after fiat currencies and track their value. For example, the base Terra stablecoin, Terra SDR or SDT, mirrors the price of special drawing rights SDR, issued by the International Monetary Fund. The South Korean won is tracked by Terra KRW, KRT, and the US dollar is tracked by Terra USD, UST, two other stablecoin denominations. Burning Luna allows users to mint new Terra. On the other hand, mining and government are done on Luna. The staking token for the Terra system, Luna, is designed to mitigate the price volatility of Terra stablecoins. Blockchain miners, sometimes referred to as validators, on Terra are rewarded with transaction fees for recording and validating transactions on the blockchain, for which users stake Luna. Luna's value rises in tandem with Terra's increased use. Principal characteristics of Terra. In the rapidly expanding Asian e-commerce market, Terra seeks to increase value for consumers and efficiency for payment service providers. Terra takes on established retail payment apps with the use of Cosmos blockchain technology. Terra circumvents the current disjointed payment infrastructure because it is a comprehensive end-to-end payment solution. Payment service companies might save hundreds of millions of dollars a year by utilizing Terra's technology. In order to oversee the collateralization procedures that support and preserve the price stability of Terra's stablecoins, the crypto network uses its own currency, the Luna, as a utility and governance token. Cons and benefits of Terra. Pros. Software developers can build their own protocols and decentralized applications. dApps. On top of Terra, using the blockchain-neutral development platform that is part of the Terra ecosystem. Numerous stablecoins connected to currencies are supported by the Terra protocol. Terra Luna tokens assist stabilize its stablecoin. It facilitates exchange between Luna and stablecoins to raise or decrease supply. Terra unveiled Anchor, a mechanism for loans and savings. Users can deposit money and receive interest on stablecoins with this protocol. Cons. Ethereum and other significant cryptocurrency projects are still ahead of Terra. Since its developers are Korean, most Bitcoin transactions pertaining to Terra start there. It's too soon to know if other markets will adopt Terra-related currencies. Compared to Ethereum, Terra is less decentralized. Some purists of blockchain might be put off by this. To be more specific, Terra is a payment system that runs on a blockchain. It was created by Terraform Labs, a South Korean company that Daniel Shin and Do Kwon formed in 2018. Former Apple and Microsoft employee Do Kwon started a company called Anify that provided decentralized wireless mesh networking technologies. In addition to being a co-founder of the Korean e-commerce company Tmon, better known as Ticket Monster, Shin is the founder and CEO of the Asian payment technology company Chai, a partner of Terra. In its goal to become a top e-commerce stablecoin payment and decentralized finance, DeFi service provider, Terra has a growing ecosystem in the crypto sector with 114 projects across DeFi, Web 3.0, and non-fungible tokens, NFTs. Several of these initiatives consist of a fixed-yield platform with frictionless access and borrowing yields is called Anchor Protocol. Chai, over 2 million South Koreans use this payments app. Low Terra. Terra is a blockchain-based decentralized lottery platform. that synthetics or fungible assets that mimic actual asset prices can be created thanks to the Mirror Protocol. Talus Protocol, an online marketplace where artists can give services and sell their works. Vega Protocol, a derivatives trading and minting platform. The Terra Protocol makes an effort to keep the price of the Terra stablecoin stable by making sure that supply and demand are always equal through the use of arbitrage. This is because the main benefit of stablecoins is derived from the stability of the price peg, theoretically avoiding the volatility typical of cryptocurrencies. Luna absorbs the volatility of the Terra stablecoin and acts as a variable counterweight to it. Imagine the entire Terra economy to be made up of two pools, a Terra pool and a Luna pool, that are used to change the pricing by offering incentives to network users in order to comprehend how Terra operates. The developers are still putting in a lot of work behind the project to make sure everything stays stable despite the crash that occurred a year ago. A few weeks ago, an article appeared on CoinGape stating that the creators of Terra Luna Classic have filed a significant proposal to enhance and introduce derivatives for liquid staking. Developers want to add support for Quicksilver, an interchain liquid staking protocol for the Cosmos ecosystem, by changing the permitted interchain account host messages, according to the proposal. As a result, the Quicksilver chain can send authorized messages and create, manage, and delete accounts on the Terra Luna Classic chain transparently. It will also allow interchain staking on any validators, as well as enhance liquidity and capital efficiency by boosting network security and decentralization. Additionally, it does away with the necessity that a position holder wait for an unbonding period before selling his staked assets. Given this, you ought to be aware that the Terra Luna creators are continuously striving to improve the project. This is to let you know that there is still hope for Terra Luna. I think all will work out in due course. Additionally, I think Terra Luna's investment can make you wealthy. However, everything relies on your investment amount in Terra Luna Classic, your expectations for the market, and the length of time you are willing to hold. The native token of Terra Luna is called LUNC. The video will now come to an end. Remember to subscribe, like, share, and invest sensibly. Regards.